In today's stock analysis, we are going to examine the key pillars, look at past results, see what the analysts' predictions are, create a valuation, and review then rate the company. Today we are going to look at GoDaddy Inc. Ticker, GDDY. Let's dive into the process I follow when reviewing whether or not to invest in a company. After I've collected all the financial information, I then analyze what I consider to be the 12 key pillars. These pillars are based on the insights and teachings of the best super investors, and what I consider to be the key metrics when evaluating a company. Ideally, we would like to see each of these metrics be at least 10%. The first pillar is earnings per share growth. This is where we take the net income and divide it by the shares outstanding. For GoDaddy, EPS growth over the past 12 months is 40%, scoring 1 point. Next, let's look at free cash flow growth, which measures the money a business can generate from its operations. Warren Buffett emphasizes the importance of strong financial health and prefers companies that can generate substantial free cash flow. GoDaddy's free cash flow growth is 26%, scoring 1 point. Next, we come to revenue growth, which tells us how good the company is at generating income before deducting expenses. Their revenue growth is 10%, scoring 1 point. Now let's turn to book value growth, calculated by subtracting total liabilities from total assets, to indicate equity growth for the company. Phil Town believes book value growth is the most important metric, as it has the interest of the shareholders at heart. For the last 12 months, GoDaddy's book value growth is 503%, scoring 1 point. We then assess the management of the business by looking at return on invested capital and return on equity. These measures allow us to evaluate a company's efficiency at allocating capital. For GoDaddy, the return on invested capital is 43%, and the return on equity is 514%, scoring 1 point for each. Now we move on to debt. Joel Greenblatt prefers companies that are able to pay off debt with their free cash flow, ideally within 3 years. It would take GoDaddy just over 3 years to pay off the debt, scoring half a point. With the information we have gathered, it tells us that aspects of the key pillars are strong, but others could raise red flags. So, let's find out more. Help support the channel by tapping the like icon if you have found the information helpful, and click on the notification bell to get alerts about my next videos. Now we will focus on other key pillars which help define an excellent business. Let's look at the gross margin, which indicates how much money a company retains after incurring the direct costs of producing its goods or services. This is currently at 64%, scoring 1 point. Next, we come to the operating profit margin, which tells us how much profit a company makes on $1 of sales after production costs, but before interest or tax. Peter Lynch prefers companies with strong operating margins when assessing their financial health and competitive advantage. GoDaddy's operating profit margin is 20%, scoring 1 point. Free cash flow yield provides a more realistic view of a business's financial health. Terry Smith prefers companies with a free cash flow yield of 5% or higher. GoDaddy's free cash flow yield is 4.25%, slightly below the target, scoring half a point. Next, we assess the 10-year book value growth as potential shareholders. For GoDaddy, this is an impressive 110%, scoring 1 point. Lastly, Bill Miller believes earnings growth is the biggest indicator of a company's stock price. The 5-year net income growth, which evaluates the company's profitability over time, is -48%, signaling a concern, and scores 0 points. In the comments section, I've included a link to the investors page and the annual report, if you want to check it out for yourself. GoDaddy has demonstrated steady growth and resilience over the last 5 years. The stock's average closing price is $88.67, with consistent trading volume averaging 6.74 million shares. Recent highs saw the stock trading at $197.62 in December 2024. Over the past few years, GoDaddy has benefited from robust revenue growth and a strong focus on expanding its product portfolio, catering to small businesses and entrepreneurs. However, competitive pressures remain a factor to watch. Looking at the overview, we can see the current market cap is $29.35 billion. They are currently generating $4.48 billion in revenue for the trailing 12 months, and have 140.39 million shares outstanding. At present, their earnings per share tells us that for each share of stock, the company is generating $12.74. Their PE ratio is 15.40, which is lower than the S&P 500 average of about 28. The overall consensus among analysts is a buy, with a price target of $177.33. In addition, analysts are forecasting between 10% and 20% growth starting in 2025. This scores a check. Let's calculate a valuation. I will use GoDaddy's current earnings per share of $12.74. Combining historical growth rates and future analyst predictions, I estimate an EPS growth of 12%. Assigning a forward PE ratio of 28, projecting 10 years forward, and applying a desired return rate of 15%, this results in a future stock price of about $1,108. Using the sticker price methodology, the current intrinsic value is about $274, with a 25% margin of safety price of $205. Since the current price of about $208 is below the buy price, this scores a check. It all depends on your personal view and outlook for the company, as well as the return on the investment you would like to see. When reviewing the key pillars, GoDaddy scored 10 out of 12, earning a check. Over the last 5 years, their stock price has shown upward momentum, scoring another check. Analysts are predicting growth of 10% to 20%, scoring a check. The current price is below the buy price, scoring a check. According to Morningstar, GoDaddy has a narrow moat, earning a check. My final overall rating is 5 out of 5 stars. I've placed this stock in category A on my stock watch list, noting it has solid growth potential and a favorable valuation. Thank you for joining me in today's analysis. Don't forget to like and subscribe for more insights.